Mark Livingstone is with us today. He just drove around coming to our studio here by the Capitol. Mark, welcome.
Thank you. Good morning. I actually
How
took
were
an
the
Uber.
roads?
Not bad at all.
Not bad.
I live downtown, so it was a 10-minute commute. Not bad whatsoever.
Where do you live?
Right down by City Center.
By City Center. Okay.
Yes.
So, no, I like being out here. This is called Eastern Market, which they tell me is a refurbished growing area.
Yeah, the real estate, you come down the street and just no houses are the same. So you have just everything from different time periods. You have people that have upgraded, people that have McMansioned. Then you have the smaller homes that have been there for hundreds of years. Just a beautiful neighborhood here on the Hill.
It really is. And we're right by the Capitol. So that's the deal here in D.C. today. But let's get to the phone lines, your acspecialist.net truth line. And let's get to Linda in Chesapeake. Linda, you're on the air.
Morning, John.
Good morning.
I agree with that man who said Trump needs to get rid of some of his family, and the one I think he needs to get rid of is Kushner, because I have a friend in New York, and he said that Kushner, his daughter went to school with Kushner, and he was at the bottom of his class. Bottom of the class as far as learning, and the only way he got into Harvard was his daddy bought him in. And Christie in New Jersey prosecuted Kushner's dad, and he went to prison for 2 years for racketeering. But Kushner is the reason that Trump got rid of Christie and didn't appoint him attorney general or to a cabinet post. And I think he would have been much better than Sessions, because Sessions is weak. And also, Kushner is the reason he got rid of Steve Bannon. So I agree with that man. Kushner, he don't know anything about politics, and Trump should get him out of there and let him go back to selling real estate.
Well, Linda, thank you for that comment. I don't know Jared. I've not met him. And I really have no opinion on that whatsoever. But as I said earlier, I do know Ivanka very well. I do know Eric. I do know Donald Jr. Eric and Donald are not involved in the administration. They're running the company, so they're not involved. So the only two kids that are involved are Jared and Ivanka. And I'm a very big supporter of Ivanka, and I think it's a good thing she's there, not a bad thing. But I really have no opinion on Jared. I don't know him. I'm not that familiar with what his areas of expertise are, but I appreciate that comment. We're with Mark Livingstone, and he is the mortgage guru of all time, and he runs the firm Cornerstone First. And Mark, you've been a founding sponsor of us. You've been with me for, we just were talking about the other day, this is our 7th year anniversary week on the air.
That's right. And it's exciting to be here. Happy New Year to you and your listeners, by the way.
Thank you.
Great to be here. To piggyback on that last caller, I just want to say that you shouldn't judge somebody by what they do in college or high school, because listen, if I hadn't been shown grace because my grades and I was a troublemaker, I went to 3 different high schools and 3 different colleges before I finally got my act together. Actually, I probably still am. My wife would say I'm still getting my act together. So just don't judge a book by his past, because people do come around and it takes some longer than others to mature. And to judge Jared by his father's actions, I don't know if that's fair. Give everybody a clean slate.
Now, you went to 3 high schools.
I did.
What happened there?
Well, I went to a private school and didn't get along well with the headmaster, so was just not accepted back to the next year. And then I went to another public school and just didn't get along well with some of my teachers, and grades reflected that. So then my parents took me out of that school and put me in a 3rd high school, which I graduated from,
What high school was that?
Walter Johnson High School up in Bethesda, Maryland.
So you were a troublemaker.
A little bit, yes. Yes,
you
yes.
Did, get in fights and stuff?
Cause
a ruckus?
Yeah, something like that.
Did you play ball?
I played cross country and lacrosse.
Lacrosse, okay.
Yes.
Well, you were one of those lacrosse players with a stick, right?
Exactly, yes.
Okay, you were a lacrosse player. Very difficult. I've never played it. I don't know the game, but I have seen it, obviously, and I know what it is. But it's interesting. When you've not played something, you really don't get the perspective.
Correct.
Right? Mm-hmm. I mean, I've never played it. I don't even know what the rules are, so it's hard to comment on it. But the other thing I've never played is hockey.
No, I'm not very good on skates. Are you?
Yeah, I never played hockey, and Ben Tribbett the other day said, "Hey, you want to tickets? You want to go to the Capitals game?" And I'm like, "Dude, I don't even know I don't even know what icing is, right? I have no idea.
You would love it.
You have to get the puck in the net.
This town is crazy over their Capitals.
They are.
And
They
the
really
Caps are doing really, really well, so I encourage you. In fact, if you want to go to a game sometime, I can look into getting tickets. We can go together.
We can do that. Well, I definitely, though, want to go see a Wizards game. I'm a basketball fan.
Yeah, there you go.
But nobody's interested in that.
I'm very interested in it.
You are?
Yeah, I
You're
love
about the
the
only
Wizards.
person I've met. Like,
Yeah.
this town doesn't care about the Wizards.
Yeah, Bradley Beal, John Wall, they're my boys.
I love watching him
Yeah.
play. He's he might be one of the best guards in the league. He's up there with Harden. So I like watching the Wizards, and I don't think they're that bad. They don't play much defense, but
Right, and you know
either way.
Georgetown plays down at the Capital One Arena, right downtown where the Wizards play, and then you got the Maryland Terps right out in College Park, not far. So
Now, can you get to the Capitol Arena by Metro?
absolutely, yeah. There's a metro station right below it and pulls you right up into it.
We'll have to do that.
Yeah, absolutely.
Now that
It's a
I'm
date.
up here all the time. Well, there's a lot going on. We've got a whole hour, so we're going to be talking mortgage, but I want to talk a little bit about the Steve Bannon situation, Mark. That's got me very upset today. This whole book and Bannon, and I'm calling him Quisling after the Norwegian traitor in the Second World War. But let's get to Sarah Huckabee Sanders yesterday getting lit up in the press briefing that I was at and saying that the president was disgusted by Steve Bannon.
Furious, disgusted would probably certainly fit when you make such outrageous claims and completely false claims against the president, his administration, and his family. If the previous administration had done anything and dealt with North Korea, dealt with Iran, instead of sitting by and doing nothing, we wouldn't have to clean up their mess now.
Yeah, well, there's no doubt about that. I mean, this whole thing is a damn mess. And here's an interesting text from Sean in Newport News, who says, Trump obviously made the right move firing Bannon. I'm never questioning another one of his firings again. Trump is the Bill Belichick of politics.
That's funny.
That is funny, the Bill Belichick of politics. Actually, I didn't call him the Marvin Lewis of politics. Lewis just getting, as you know, rehired for another 2 years by the Cincinnati Bengals, even though he's been there since 2000 and has yet to win a playoff game.
I think calling Trump Bill Belichick is quite a compliment.
I think it is too. I mean, they're the favorites to win the Super Bowl again.
Yeah, again. I think it's going to be Eagles Patriots.
A lot of people like Minnesota.
Okay, we'll see.
We'll see, but I would say Eagles. But I saw Nick Foles. I saw some of that game last week. But I mean, he's no Carson Wentz. But now he hasn't played, so maybe that's it. And there was a time where they were building their offense around Nick Foles. I think that's when Coach Kelly was there. But Eagles will be tough. I'm a Titans fan, as you know. I guarantee a victory Sunday over Kansas City. George, guarantee a victory on the road. We're going to go into Kansas City. We're going to win that game. And then we go to New England. I'll hold my thoughts on that. So let's just do it one game at a time. I know they're going to go in and beat Kansas City next week. But let's
Andy Reid's pretty good.
Well, we got the best run defense in the NFL. You can't run on Tennessee. You got to throw the ball. And I'll take my chances with who's our quarterback, right? Alex, whatever his name is. I'll take my chances in the air. They're going to have to beat us. Alex, what's his name, is going to have to beat us. Let's talk about interest rates. Look, the economy in Q4 16, we're going to get something out the next couple of days that is going to show that it's grown at I think it was going to be a 4% rate, right? We've had quantitative easing during Obama. There's no way there's not going to be a significant and steady raise in interest rates, Mark, to bring interest rates back up to equilibrium because they've been artificially pushed down. Well, what does that mean when that happens?
Well, let's get something straight. Housing and jobs are really the key of an economy doing well. Housing and jobs. Right now, we're seeing housing just take off like a bullet. And jobs, as we all know, the unemployment rate is so low right now. It's just great. I was saying to John as I came in here, he hit the nail on the head to be a radio talk show host at one of the most pivotal times in our country's history. I mean, there are just things happening right now just so fast and furious. It's exciting. And although I'm just a little part of it, the housing and jobs, I'm on the forefront of the housing sector. And there's just so much going on. I was just in here in November talking to John, and since then, we've had the Fed raise the interest rates by 0.25% in December. Since then, we've had the tax plan rollout. Since then, we've seen Fannie Mae and Freddie Mac raise the minimum loan amount by the greatest increase since they started raising the loan amounts. There's just so much going on. I was having dinner with my wife and stepson, Jack, just a couple weeks ago, right after the tax plan was rolled out. And I was telling Jack how there are times in my past that I remember being around his age that there were pivotal times within the country. You know, times like when Watergate happened with Nixon, times when, President Reagan. I remember I was in 7th grade when President Reagan, John Hinckley, tried to assassinate him. And I said to Jack, I go, this is a time that you're always going to remember. When President Trump came upon the country, there was a transition of power from the old administration to the new. And this administration is doing so much to take our country back and just make positive gains. And we're seeing that, John. We're seeing the economy just take off. We're seeing things that the Trump administration is doing that I just think are so awesome for this country and for all the listeners. And it's exciting to be part of it. Housing right now is just taking off. The time spent for listings on the market right now is down to a 17-year low. We're seeing interest rates still historically low. Sure, they've gone up, but at the same time, the Fed wants to keep inflation intact. So we're still seeing rates below 4%. We're seeing home prices appreciate to levels we haven't seen in 11 years. So what does 2018 look like in the housing sector? Well, I think you are going to see the steady but slow increase in interest rates. The tax plan, everybody's worried, the interest isn't going to be tax deductible. Well, let's get this clear. Everybody that owns a home right now or home equity line of credit is already grandfathered in. So it's not impacting those that are already in their homes. So rest easy. And what it does impact is those with loan amounts above $750,000. That's only 1% of people buying homes in this country. So let's say somebody buys a home for $1 million and they're putting down $250,000, which is the norm. This tax plan is not going to impact them at all. It's those loan amounts that are over $750,000. It's second homes. It's home equity lines of credit. That's what it's impacting. It's not that big of a deal, people. I think it's excellent. I mean, there's over 40 companies that have already given bonuses of up to $2,000 to all their employees. Companies like Southwest Airlines, American Airlines, companies like AT&T, all these companies are giving huge bonuses because the tax plan is benefiting these companies so much. And what's that going to do? It's going to be the trickle-down effect that these employees are taking that bonus and then pouring it back into the economy. So this is a great thing. So we're seeing housing take off. I think 2018 is going to be a great year. Inventory is low. Interest rates are low. It is just the economy is chugging along. I think we're going to see a lot of people taking equity out of their homes. Because of the increase to maybe do some home improvement or pay off credit card debt. It's a great time to just be in housing right now.
And tell us about, and one of the things you were telling me the other day is by refinancing, whether you guys are going through a mortgage application, that you could eliminate PMI, which is the mortgage insurance that kind of aggravates everybody because you kind of feel like you're paying it for no reason.
Correct. So anytime you put down less than 20% in your home, so you have less than 20% equity, you're paying what's called private mortgage insurance, PMI. But people get confused and think that's helping them. It doesn't help you at all. PMI actually benefits the lender so that if you ever go into default on the loan, the PMI company pays the lender, not you. It is no longer tax deductible. It was tax deductible under the Bush administration, but Obama took that away. So therefore, right now, PMI does not benefit the homeowner whatsoever. However, with homes appreciating to the highest levels in 11 years, a lot of people that purchased homes in the last 5 years and maybe put down only 10 or 15% versus the 20% can now refinance and eliminate that monthly PMI, which can be anywhere from $200 to $300 per month. So I would say that's the majority.
That $200 or $300 a month of PMI, that's going to nothing. That's not going to your interest.
Correct.
That's not going to pay down your mortgage. That's just going to the bank.
Exactly. And so right now is the time to check to see what your house is worth. Down in the Richmond area, just in 2017 alone, we saw a 5.4 increase year over year in home values. So those people that were on the fence and almost having enough equity to, get rid of the PMI, or those that don't have PMI and want to take cash out to pay off credit card debts, they can do that now by refinancing and taking advantage of these rates. And government rates are still historically low. A 30-year fix is 3.75%. That's excellent for VA, which I know a ton of your listeners are veterans, for FHA. So, and FHA is the new, I don't want to say subprime, but it's for those with less than perfect credit. We can go down to a 550 credit score with FHA loans.
I could get a mortgage.
Anyone could get a mortgage, right?
I'm just about that 550. If I try real hard, I can get up to 550.
We can talk.
I've been stuck at 549 for years. I just can't get that. I got to get one more point.
All right.
But look, now's the time, because even if you just get rid of that PMI alone and then you bring your payments down, right?
Right.
Let's say $200. Now you're talking about $400 a month cash flow.
Yeah.
That's a lot of money, Mark.
That's a lot of money.
Plus, then you add, $200 or $300 for the tax break. Now you got another like $700 a month you didn't have. That's big money.
Right. And the other thing, John, is that what I was saying earlier is that Fannie Mae and Freddie Mac have raised their minimum loan amount. So it was originally last year, the loan amount was $636,000 was the threshold between Fannie Mae insured loans and true jumbo. And as we know, jumbo loans are not insured by Fannie Mae or Freddie Mac, so you're going to have ultimately higher interest rates. Well, Fannie Mae raised that loan limit to $679,650. So that's the new threshold between Fannie Mae and jumbo loans, so you get the better interest rates. So right now is the time. Again, refinancing is hot, taking cash out, but also purchases. And I think in 2018, we're going to see a wave of millennial home buyers. I think that's the next wave to come along. And what's the old adage? As the tide rises, all boats rise.
A rising tide lifts all boats.
There you go. Thank you, John. I gotta tweet that out. A rising tide lifts all boats. And I think that this housing, that's just going so well right now, the millennials are going to get off the fence. They have been the population that has just been, on the sidelines watching what's happening. And now that we have lower inventory, all the builders, Pulte, NAR, what is it? DR Norton, I think it is, are all posting huge gains in 2017 because right now there's not enough inventory out there.
Mark, the head honcho of Cornerstone First Financial, a mortgage company that he started many years ago, the best mortgage company in the history of all mortgage companies ever. It's huge because he has the best deals, best rates, best service, best of everything. And every listener that I've ever had that have gone to him has emailed me or texted me and said, Mark's the bomb. You got to go there. So if you're looking to refi, if you're looking to get a reverse mortgage, you want a VA loan, whatever, time to get in right now. You got to go to Mark Livingstone. And even if you don't qualify, even if you go to your bank and you get turned down, don't despair. Call Mark because he'll figure it out. That's what he does. He's a fixer. He'll figure it out. Plus, he's got his own money.
That's right. We're now not just a broker, we're a lender. So
if he likes you.
Right. So we have $3.5 million that we have to churn every month that we lend out.
That's a lot of cash.
That is. And that's
How'd
why.
you get all that money?
I guess it was my credit. So,
it's over 550.
Yeah, it's over a 550 credit score. Exactly. So if you, anything that you're looking to do, whether we can do it, I say in my ads, hey, if we can't do it, nobody can, because we do have our own money. And then if we have to outsource it to different lenders. So I'm constantly keeping my finger on the pulse of what these banks are offering. And as interest rates rise, the competition among banks goes up. So banks are always looking for new products to woo customers from other banks. So I'm always out there searching to see what's out there. So for example, last year, you would have never thought that there's a bank statement program. And what that means is for self-employed individuals that may happen to take a lot of deductions. So their adjusted gross income is a lot lower than what their gross income is. So therefore, they don't qualify by standards, normal standards. We can take their last 12 months bank statements and average together all the deposits, and we'll go off of that for income. That's something unheard of a year ago. And so that's because banks are becoming more competitive and want more business. So we're not going to go back to the days of the subprime, stated income, stated asset, liar's loans is what we call them. But we are seeing just some more parameters opening up. Last year, we would only go down to a 580 credit score, which I thought was so low, and now we'll go down to a 550 credit score.
Woohoo!
So you see that the grounds are opening up for more people with a little bit challenged credit. You know, everybody goes through something. Challenge credit, right. I never say anybody has terrible credit. It's challenged because you don't know what somebody else is going through, whether it's a divorce, whether it's a sickness or a death in the family. Those things can impact somebody's credit pretty negatively. And so therefore, we will, take all that into consideration. And like I said, if we can't do the loan with our own money, we'll find somebody that can. And a lot of banks right here in D.C. will call us and go, hey, I have a customer. Our minimum credit score mark is 640, and this guy has a 610. What can you do? And those are the people that we are helping out that otherwise wouldn't have an opportunity to buy a house or refinance and get out of their PMI.
So here's the thing to do, because Mark Livingstone really is the guy. I mean, he gets all this done. He knows everything that's going on. He's got his own money to lend. And if you're in the market for a mortgage, that's fine. Go to your bank, get their rate. Don't sign it. Go to Mark. Get turned down. Go to Mark. At the end of the day, whatever you're doing, go to Mark Livingstone, because you're going to get a better deal. You're going to get the same loan amount, pay less money. Like, who would do that, right? It's crazy because, the gangster banksters, they're going to milk you for every dime you got, right? They're taught to do that. They're taught to gouge. Mark Livingstone, on the other hand, his thing is he's going to give you the best possible deal out there. Now, here's how to get a hold of him. 202-625-1221. 202-625-1221. I know you want the number a third time, right? That's what they teach in radio, 3 times a charm. 202-625-1221. Or you go to your browser, cornerstonefirst.com. Tell them John sent you. That's important. That's important when somebody says, how did you hear about this? Don't just say radio, because then they'll put a check mark by Chris Plant. No. I want to say I heard it on the best radio show in the history of the world, the John Fredericks Radio Show, the only guy I ever listen to in the morning no matter what. That's what I want you to say when you call up. Then you get an even better deal.
There you go. Thank you. And John, last time I was here was November 16th, and I was feeling in a very giving mood that day. So I said, hey, if anyone calls today, November 16th, last year, and says they heard me on the radio and they want to move forward with a loan, I'll pay for their appraisal. So I'm going to say the same thing today. January 4th, if you call in, we will reimburse you for your appraisal cost. Now I'm going to limit it to $450 because that's what the usual appraisal cost is. But I did have one person whose loan we closed in Virginia Beach, and for some reason that appraisal was $600. So when I saw the appraisal, I was like, I can't really go back now and say, hey, it's only up to $450, because I did say on John's show I'd cover the entire appraisal. So if you call today the office, 202-625-1221, we will not only get you the absolute lowest rate guaranteed on your refinance or on your purchase, cash out, taking PMI off your loan, but I will pay for your appraisal if you call today, 202-625-1221. Also, you can follow me on Twitter at Cornerstone1ST. But now is the time, because the Fed raised rates at their December meeting, and they have said that the interest rate increases this year are imminent. They're looking at 3, possibly 4 interest rate increases, going to be determined by inflation throughout the year. But, the Fed has a lot of new people on it that are really ruminating that they want to keep inflation in check, and all signs point to increases in the interest rates. Inventory's low. We know it's going to be a great year, 2018, not just for this country, but for housing. And I said earlier, housing and jobs, that is the motor that runs a great economy. And right now we are just trucking along.
You're rolling, no question about it. I like that deal, though. You're coming in here. It's like the after Christmas sale, the Santa Claus return sale. Okay, this just in. A lawyer representing President Trump sought today to stop the publication of a new behind-the-scenes look about the White House by Michael Wolff called Fire and Fury, that has already led the president to angrily blast his former chief strategist, the opportunist Quizlian Stephen Bannon, who we have written off for life. I'm done with Bannon for life. The legal notice for life, Mark, life. That means like forever. Mm-hmm. The legal notice addressed to author Michael Wolff, who I'm still absolutely aghast that somebody made the decision to let this guy in the West Wing, sitting around on a couch for a month. What did they think was going to come of this? This is like mind-boggling to me. Anyway, it's been sent to him and Trump's lawyers right now are pursuing possible charges, including libel in connection with a forthcoming book, Fire and Fury, because they say it's a pack of lies, as we have blasted the whole thing throughout the day today. So once again, I'm right. So that's why you tuned me in. And we got a caller. Let's get to Joe in Virginia Beach. Joe, you're in the snow. You're on the air.
How you doing, John?
Good, man.
Hey, Joe.
Hey, so quick comment. Now,
Yes.
Like I said, I think I talked to you yesterday, John. Love your
Yes.
show. Been listening for years, and I've heard your commercials, Mark, for years as well.
Thanks, man.
When you were the only reason I called in when you guys were talking, one of the things you were talking about in the economy changing is this companies giving bonuses out.
Correct.
You mentioned companies like AT&T giving their employees bonuses.
Yep.
And so what I've read is they did give some employees bonuses up to, I think, 1,200 employees or 2,200 employees.
Okay.
Then they laid off 20,000 employees.
Okay.
So
I mean, when was that?
It's a little, to me, it sounds a little disingenuous to make that statement.
Okay, but is
And that
that
was
just
my only
AT&T? Okay. Hey, Joe, I'm not aware of that. Oh, was that just AT&T?
That's just the one that, off the top of my head, that I remember. I'm actually driving at the beach right now.
Okay, not a problem.
Right?
Oh, cool. Well, thanks for bringing that to our attention. I'm not sure when those layoffs occurred. I would assume that those were already in the makings before the tax plan was rolled out. But what I read this morning was that there's over 40 companies giving thousands of bonuses between $1,000 and $2,000 each, including Southwest Airlines. That's all part-time and full-time workers got a $2,000 bonus. American Airlines, AT&T, Fifth Third Bank, just to name a few. But yeah, I mean, the rolling back the corporate tax rate from 35 to 21, John, and that's just, like I said, going to push money into the economy, which is going to help the country.
Hey, Joe, even the John Fredericks Radio Show this year, the Fräulein gave out a bonus based on their tax cut, right? Because we only have one employee. Mike got a bonus. That was about it. We only have one employee.
Right.
Probably should have given one. So
you didn't get a bonus,
vendors.
John.
Huh?
You didn't get a bonus.
Mike got a bonus. We have one
Only
employee.
Mike, huh?
Yeah, he's the only employee.
It's the only employee I got.
But Joe, I'm going to look into that today, and you're welcome to email me, and then I'll look into it. I'll check all the news outlets, and but I'm willing to bet that was put in place long before the tax reform bill was rolled out. So that is unfortunate. Hoping that companies
I'll do
will.
the same. I'll definitely look into it too, and it's just something that came to me off the top of my head. As I'm driving home from work here this morning.
Sure. Okay. Very good.
And then the other thing is, so if the home appraisal thing.
Yeah.
If my wife calls you today and sets this up, you pay for the appraisal? Is that
That's correct. Up to
$450?
$450. So what we do is have you pay for it, and then we reimburse you after closing. Up to $450. Because you're right down in Chesapeake Beach, where that appraisal cost me $600.
I'll definitely let her know about that.
Excellent, Joe. Thank you. Look forward to talking to you. You can call me. I'll be in the office all afternoon.
I'm sure we'll be talking more.
Perfect. All right. Thank you, Joe.
All right, Joe. Good man. 202-625-1221. 202-625-1221. And this just in the prison's lawyers trying to withhold the book Fire and Fury from coming out, saying that it's a pack of lies. They're going to sue for libel. But again, I want to go back to whoever made the decision to let Michael Wolff hang out in the West Wing and talk to these people for 6 or 7 or 8 weeks is a dumbfoundingly stupid decision. And again, people in there with their own agendas in the West Wing. If you go there to work, you should be there to do one thing, and that's to serve the president and drive his agenda for the American people, or get the hell out. Today we're with Mark Livingstone, principal, Cornerstone First Financial. Go to cornerstonefirst.com for your mortgage needs. He's got a great deal again. What is it, Mark?
Free appraisal if you call today, not tomorrow, not next week, today, and register to do the loan. Refinance or purchase, we'll pay for your appraisal up to $450. That's the exact cost for a VA, FHA, or conforming appraisal. We'll pay for your appraisal at cornerstonefirst.com.
CornerstoneFirst.com, they're going to pay for the appraisal to up to $450.
Up to $450, right?
That means you got nothing to lose, right? I mean, if your appraisal is, even if it's $500, you lose
$50.
$50.
Yeah.
You can get your house appraised. You know where you're staying. You don't have to do anything with it. But, the thing is, if you can get the appraisal, then you know what your options are.
Exactly.
Right?
All we need is a credit report and appraisal. We can tell you what we can do. And in most cases, the appraisals are coming in higher than they have in the past 11 years.
Why is that, Mark?
Because of home appreciation, because there's a limited inventory. So therefore, homes are being gobbled up very quickly once they go on the market. And then that pushes the upward pressure for homes being purchased higher than what they were listed for, which again, in a rising tide, all boats.
A rising tide lifts all boats.
A rising tide lifts all boats. And so therefore, this is pushing, and a Richmond area alone, 5.4% in the last year. Nationwide, the median sales price is up 11%. And so therefore, home values are going up, and it's time to take cash out to pay off your debts and make the interest on the credit cards tax deductible.
You got to shoot the ball. You got to shoot the
ball.
basketball. That's my theory, right? You got to shoot the basketball. If you don't take the shot, you have zero chance of scoring.
There you go.
Got to take the shot.
I love
right?
it.
That's what we believe in. Field goal attempts. That's my whole thing. We like 95 a game. We know if we shoot the ball 95 times, we're going to make 30%. We're going to get 30% of the rebounds we miss, and we're going to make 30% of those. And we're going to score 90, and that's why you can't beat us. You just got to take the shot.
I love your sports analogies. Those are really good.
Those are good. Well, thank you very much. We appreciate that.